All right. Welcome to another episode of Tuesdays with Audi, and I am your host, Audi. So now that I've mentioned what stock that every new investor should look into, which is an ETF, as well as did a little bit of explaining the stock market, I am gonna now present to you the top 5 mistakes that every investor makes, and especially new investors. So the first mistake on that list is the failure to diversify. Diversification is the fact is that you want to put your eggs in as many baskets as possible so that you will mitigate as much losses as you potentially can if one basket was to drop and all your eggs crack. That makes sense, right? I hope that made sense. So with an ETF, the one I presented in the last episode, that in itself, if you purchase that as your first share or first stock, then it will give you automatically the diversification that you need in order for you to protect yourself if something goes wrong in the stock market or any individual company. But with the YOLO culture that we have in terms of people putting their life savings and everything else into one particular company, whether it's cryptocurrencies, whether it's other speculative trades that they actually want to make, yes, they can actually end up making as much money as possible, as we have seen in terms of YouTube or other platforms that we find these things. But in addition to that, there are a lot of people who lose most of their money by YOLOing their life savings into one particular company or one speculation in terms of trying to find the best trade that will bring them the maximum amount of profit. So diversification helps you to prevent yourself from putting all your eggs in one basket and protecting you, as well as giving you a steady return on your investment in a diversified portfolio, which in this example is an ETF. The second mistake that every new investor makes, and I guarantee you, I even made that multiple times, I'm still making this error, is that they fail to do their own research to find out about the companies that they're investing in. So I know that there are a lot of platforms where people can tell you which companies that they think will be better off in terms of what you can invest in to get the maximum amount of return. But before you go ahead and pull the trigger and make that trade or buy or sell, make sure that you do your own research and look up that company and what they are doing, as well as tracking their earnings. Read up on the company, go on the company's website, and check for yourself before you either buy or sell a company that you have actually purchased. Because even though people are telling you and giving you insight of what to do, at the end of the day, the decision is yours to make, and you must have an informed decision before you actually make any decision when it comes to either buying or selling a stock. And sometimes, even though it may seem too good to be true, and some of those people who tend to actually give you those particular insight into companies, they may go ahead and present how much they have earned. Don't fall prey to them telling you how much they have earned after the fact, because when you are getting in late, you are likely going to purchase the company at a higher price than the person who did at the early stages. So make sure that you continually do your research, because even though someone is trying to help you in maximizing your return, it is likely that they cannot guarantee you that you will get the best return as possible. And that's where you have to do your work to ensure that you are making the right decision for you and not for anyone else. The third mistake, I know we live in a culture where if you want something right now, especially with food, you can order it with Uber Eats, DoorDash, or these other stuff. Or if you want to watch a movie, you got your Netflix, Disney Plus, HBO Max, and I don't know, unless if you want to lose weight, but we don't have an instantaneous solution to that yet. But the thing is that the many new investors, the third mistake that they make is the fact that they lack the patience for them to watch their companies grow over time, or even to get the returns from dividend investment or reinvesting in dividends, and essentially watching the stock prices go up or down on a daily basis. So the thing is that many people, when you are new, it's like when you see your share prices go up, you get excited. It's like, ooh, that's so fun. When it goes down, then you're like, oh my gosh, it's like, this is going down. I need to get out before it's too late. But the thing is that with patience and spending time in the market, it's the likelihood that you are going to benefit from having a steady, a stable income coming in from a more stable company than it is for you to actually feel as though you are automatically going to become rich overnight by just making this one stock pick and not having the patience to watch the seed that you have planted grow over time so that you can reap the fruits of the money trees. So that's the thing with the patience. You have to go ahead and put in the work and the time, and you have to give it some time for you to reap the rewards of what it is that you have been doing, and patience is the key. They say patience is a virtue, and life is a virtue, and the stock market is even much of a virtue, because it's a lot of time you can make a trade so quickly that most people tend to be like, okay, well, I don't have time to wait for this. I'm just going to get out, because they're not reaping the returns in terms of what they expected from that company in a short period of time as they anticipated that they would have by investing in a stable company or even in an ETF. The fourth mistake, I'm sure we all have heard the term, If you fail to plan, you plan to fail. The fourth error that many investors make is that they go in without a plan. So before you even purchase a share or even have an idea of when you can sell, you need to plan, first of all, what is it that you are going in, at what price, or what price you would be comfortable in going in, as well as what price would you be willing to sell, how long you plan on staying in this position, if it's for a short period of time, is it a year, 2 years, are you going to stay in this forever? I mean, we can't stay in it forever technically, but you have to at least give yourself a particular timeline, and when you anticipate either buying or selling a holding that you have, so then you can go ahead and plan in accordance to what it is that you want to see in terms of making decisions for you by purchasing or selling any given holdings in any company that you have, because you need a plan before you go in. The plan to buy and the plan to sell is very, very much important, because at the end of the day, you need to be objective in terms of your decision before you go into the market, because once you are in the market, it's a continuous process, and every single day something is going to happen. So that plan helps to keep you grounded in terms of the decisions that you have to make in the market in any given company that you have. The fifth mistake that we will talk about here today is the fact that as humans, we are emotional junkies. So in the stock market, your emotions are always going to be on the go. So number 5 is letting emotions affect your decisions. Emotions are going to play a part in whatever decisions you make, but running only strictly on emotions are going to have their consequences in terms of being in the market. So we know there's a lot of fear of missing out. For example, GameStop stock, when that was going crazy, I'm sure a lot of people, in terms of the fear of missing out in terms of that emotion that they were experiencing, they went in probably when it's at $400 and they purchased shares. Some people, because when they saw it at $50, like, oh my gosh, I could have gotten this at $50, but now it's like at $400. It's like, I don't want to miss out. And then so they went in and bought shares at $400 and they suffered losses by that. We saw what happened with DOGECOIN. People are likely going in expecting to get the same returns as those people who actually were in earlier, because now they want the same rewards and the same emotional feeling that those people got by earning so much in terms of making the early investment or early speculative trade in those particular companies, and trying to get the same thing so that they can actually satisfy their emotional needs of being excited while in the market. The thing is with the market is that emotions are going to play a very key role in whatever decisions you make. That's why you need step 4, which is a plan, so that you can mitigate your emotions from it affecting you in terms of the decision that you are going to make. And the stock prices and the volatility that you're going to see every single day, they're going to also be driving your emotions. So every single day there are going to be prices going up and prices going down. Up is going to make you feel good, down is going to make you feel sad, but you need to actually have a very more objective view, not just in a day movement, but an overall picture in terms of what is happening in the market. So for me, yes, I continue to make those mistakes, especially with the emotion aspect. But sometimes I gotta make sure, like, take a step back and be like, okay, well, Audi, why are you doing this? Is it something that you're doing because it makes sense, or is it just that you are letting emotions and your fear of missing out drive you and making this decision? And even with mistake number 2, where, you know, not necessarily doing the work in terms of looking at the company and making sure you do your due diligence in terms of your research, I tend to fall into that when I see a hot pick or a hot company that someone has recommended. It's like, this sounds good, I'll probably just do it. And then it's like, eventually when I start losing money, I'm like, oh my God, I should have done my own work. But you know, hindsight is 20/20. And then again, lack of patience. Come on, guys, you know, patience is something that you work on. And even though some of us may feel as though we are very patient people, time in the stock market and watching that prices go up and down, boy, I don't know. It's like, how do people do it? It's like, I don't know. But those are some of the key things in terms of the stock market that people make in terms of mistakes, and I have suffered a lot of them. However, seeing that I have come to realize that those are the mistakes that I've made, now I'm starting to kind of, you know, take a step back and kind of identify those mistakes that I'm making and how it is that it's affecting me in terms of my decision making when it comes to picking companies, and also how long I want to hold them and when I want to sell and when I want to buy. And that is one of the key things that every new investor needs to do, is in terms of kind of, you know, looking at those top 5 mistakes and making sure that you are not falling prey to those mistakes in your journey as a new investor. Whether it's in the stock market or any other financial vehicles, those things are likely going to come up in your decision making. And with that said, thank you guys for tuning in. Thank you for taking the time out of your day to stop by. Don't forget to hit the like button. That would be very much appreciated. Subscribe and share this video with anybody that you feel as though would benefit from it as they start and continue their investment journey in the stock market or anywhere else. So next week, I won't necessarily be discussing the stock market. I will be discussing a different topic because this month is Mental Health Awareness Month. So I will do an episode on mental health awareness next week. Then we will reconvene in terms of talking about the stock market. This is definitely a topic that I find very difficult to discuss. So I'm going to try my best to see how I can approach discussing the topic when it comes to mental health awareness. So peace, love, and enjoyment. Deuces, I'm Audi. See you guys next week.